Ever wonder how we measure the size of a company? It is not just about revenue. It is about market capitalization. Market cap is short for market capitalization. It is the total dollar value of all a company's outstanding shares of stock. You calculate it by multiplying the current price of one share by the total number of shares the company has issued. Market cap helps investors understand if they are looking at a small, stable, or massive growth company. It is a key metric for portfolio building. Market cap is different from a company's book value. It represents what the market thinks the company is worth right now, not just its assets. Investors group companies by size. Small caps are usually under $2 billion, while large caps often exceed $10 billion in value. Remember that market cap changes every single day as share prices fluctuate in the stock market. Thanks for watching. Understanding market cap is a great first step in analyzing the stock market. See you in the next video.